Hi, this is James Shug from Westpac London with our end of day report for Thursday, May the 17th. Look, it's very much a negative day for equities with the focus that was on Greece shifting to Spain today. Last night the Spanish Prime Minister said that Spain risked losing access to financial markets to finance its budget deficits and the maturities and rollovers and interest on the debt that it has. That was followed today by reports of a run on Bankia, somewhat ironically the bank that's about to be partly nationalised by the Spanish government, to the tune of €1 billion. Now it's subsequently been denied that run took place, but nevertheless it's impacted on market sentiment towards banks more generally across Europe. There are reports that Moody's might be about to downgrade something like 19 banks in Spain tonight or in the next few days. And also the Prime Minister in Spain, he actually asked for help from EU institutions to help restore some confidence into Spanish financial markets, which was a pretty strong suggestion that the ECB do a bit more, not just cutting rates, but perhaps reinstating the securities market program, whereby the ECB would buy in small amounts the bonds of sovereigns off the market to hold yields down. But as of yet they haven't fired that up, it seems. So concerns about Spain very much at the front of the market's attention, and also concerns about the US economy with the Philadelphia Fed Factory Index down from +9 to -6 in May. It's the first negative reading since last September. Actually contrasting too with the New York Fed Factory Index a few days back, which bounced quite sharply in May. Initial jobless claims were steady at a slightly higher rate, 370,000 in the latest week, revised up. The previous week was revised up. A bit of an uptrend now apparent in that series since February. And also the leading index was negative for the first time in April since September last year. So a bunch of negative numbers on the, or soft numbers on the US economy there has reignited speculation, particularly following the Fed minutes last night, which talked about several members thinking there might be a case for further easing. Add in all the European concerns and our view at Westpac remains there probably will be another round of quantitative easing from the Fed, but it sounds like the market's shifting that way, and that's been reflected in some of the price action I'm just about to run through. Firstly, in equities though, in Europe, 1.2% losses in the London, Paris and German stock markets today. The Spanish market down 1.1% and the Italians down 1.5%. As I speak, still with a bit of trading to go. The Dow is down 0.7% at 12,511. That's off 87 points. Commodity markets are a bit more interesting though, because the US dollar has softened today on the speculation that the Fed might embark on another round of QE. We've seen some support for commodity prices. Not a lot for oil. It's down 0.2% at $92.62 a barrel. Two forces at play there. The weaker factory index from Philadelphia Fed, a negative for the oil price, but the possibility of Fed QE, quantitative easing, actually a positive for the oil price. Copper prices too are down 0.1% today, but gold loves it. I mean, gold, seen as a hedge against inflation, is up 3.1% at the moment. Sorry, that's silver. Gold's up 2.4%. At $1,572 an ounce, benefiting from that safe haven status against the inflation that may evolve if the Fed does indeed embark on another round of quantitative easing. The Aussie dollar at 99.4 US cents is a little bit stronger as well. It's also benefiting from that weaker US dollar because of the Fed possibility or increased possibility that the Fed might embark on another round of QE. So the Aussie's got two forces pushing it around, increased risk aversion because of what's happening in Europe, but the possibility of Fed stimulus. So that's it for today, and also that's it for the next couple of weeks. I'll be away, but back in the week of June the 4th, although that's actually a public holiday, so is the 5th, so probably the first one of these you'll see again will be at the close of the day in London on Wednesday, June the 6th. Until then, have a safe and happy time.